Hey, another Ehang video. We will talk about some internal plans of Ehang, which were not disclosed in the earning release. It will be very interesting, so stay tuned. It aligns very much with what I said in my last update to the earning release. If you did not watch it yet, I will put it up here and in the description below. We will also talk about short interest and the short squeeze myth. Of course, we will also have an overall update on your favorite stock, Ehang. But first of all, welcome to High School Dropout's advice. If you need subtitles, click on the subtitle button right here. If you want to join my Discord channel, you can do that with the link below in the description. Sometimes it's difficult for me to check out all the comments you guys leave because most of them get filtered out by YouTube from time to time. We have another big drop of nearly 12%, and we are trading at $24.60 with a market cap of 1.35 billion. On a technical standpoint, we are creating lower lows on several occasions already. There is a lot of pressure pushing the stock down. I can imagine we can get closer to the $20 support mark. Many people still need to digest the earning release and are likely to follow the big movement, no matter if it goes down or not. Those kinds of traders and investors only try to be part of a trend. In Ehang, Scandinavia, we see that Ehang is starting its drone trials. In my previous Ehang updates, I did report that they want to ship small cargo for medical use via drones. These are the trials to that project. The project is also tied with other European countries. The test result of the trials will be shared with other European countries. Now let us talk about the short interest rumor and that the short squeeze should happen soon. Let me show you some data. We see that the percent to float has increased to 7%. Let me explain this part to you so you understand how short squeezes can happen and what dynamic needs to be provided for a potential short squeeze. You see, we have 54.7 million outstanding shares. We know that the CEO and the directors hold around 40% of the shares. So there are 31.7 million shares on the market. This is the float. We have a 2.2 million shares that have a short interest. So this means 2.2 million divided by 31.7 million shares is 0.069, which translates to 7%. The short sales volume, however, is having an uprise, as you can see here. We have a short sale volume ratio of 14%. So is 7% on last month or 14% on a day in April a lot? It's not a lot, but it's not little either. Let me give you a few values so you can have a better relation to the numbers. The average stock of the SP 500 has a short interest of 3%. So Ehang at being 7% for the moment is double that amount. But will this amount result in a short squeeze? No. Short squeezes happen usually when the short amount is getting close to 25%. So we are still far away from that amount. We also need to take another value into consideration. The value is called days to cover. Let me give you an example why this value is so important. When short interest traders open a short position, they will borrow a stock and sell it for the current price. He does this hoping that the stock goes further down, so he can buy back the stock and give it back to the guy who borrows it from. The guy who lends the stock gets a little interest in the stock but cannot sell the stock when it goes up or down. Based on this dynamic, time pressure can be built on the short seller. Imagine a bunch of short sellers have to return their stock in 3 days and did not buy the stock for cheap yet. The price is around the price they sold it for, and the days to cover is 1 day. When the days to cover are only 1 day, the short seller can get all their stock and return it to the lender and would end up losing nothing. There are just too many stocks out there for them to grab. If the days to cover is at 6 days, that means that only half of the short seller can buy the stock for a break-even price during these 3 days of trading, because the typical trading volume of the 3 days is only half of the volume of the stocks which were shorted. For example, if each day there are only 30 stocks that get traded, then you would have 90 stocks in 3 days. But now the short sellers have shorted 180 stocks, which they need to return to the lender. So they will fight for the 90 stocks, pushing the price higher and move more potential sellers to sell with a higher price. This is why the days to cover are also important. Now you understand that with 1 day to cover there is no short squeeze possible, because so many shares get traded in comparison to the shares which need to get bought to return to the lender. Now that you understand the percentage to float and days to cover, I want to show you this. This is the short interest history of Ehang. You see that we had higher days to cover in October and November last year. We also see that the daily share volumes are higher now than it was in the past. It will get more apparent in my next source. You see that the share volume in history was very low. This means a small amount of short interest of 200,000 stocks would have been way more difficult to cover than 2 million nowadays. So there is a lot of misconceptions out there, and I hope that I can explain this to you so you are not putting your hopes on wrong values. You see in the green box that the days to cover range between high as 13 days to 6 days. I told you that a short squeeze could happen when the value of the days to cover is 5 or higher. So let me show you what happened to Ehang. Have a quick look on your left. You see the period of this high short interest is from May 15th to June 30th. Now let us have a look. What happened? Nothing happened last year. There was no short squeeze at all, because even the values were there for a short squeeze to happen. Nearly 14 days to cover. This is a scary number for a short seller. Imagine you have to return your stock in 3 days, but there is just so little trading volume which you need to compete with other short sellers. You see that the shorters just shorted less over the time period because the buyer and shorters were pretty much in balance. So shorters could not make any money and left the position. You see how the 13 days to cover reduces over time. If we would have a catalyst event like Ehang get approved by the FAA or any other big positive news, the stock would naturally attract more investors, pushing the price higher and bringing short sellers in panic mode, which will explode the stock. We saw this catalyst with Rocket Company with their earning release, but you also see it went down again because short sellers were doubling down and could suppress the buying pressure. So I hope you don't get spooked out when you see that the short interest is increasing. You see that the short interest in volume gets higher, but this is also based on that we have more shares on the market now and the trading volumes are increasing. So always pay attention to the percentage to float days to cover, and when those numbers are given, you still need a catalyst that puts the stock in an imbalance. You need to imagine the investors and short sellers on a scale where there is no momentum, nothing happens. With a catalyst, news, negative or positive, will bring some movement in the stock. Based on this observation, I don't see a short squeeze happening in Ehang anytime soon. I'm a bullish long-term Ehang investor, but I want to be honest with you and not building hype around the stock. Here is some good news. We have a $33 price target from SEC, but on the other hand, Morgan Stanley, we had a downgrade. I don't give much value on price target. It does not matter if we hit 50 by next month, but have to visit 25 first. All we need to know that we will be around 500 in 5 years. If you want to drive from Las Vegas to LA, you will not count how many left and right turns you need to make and how many up and downs you will encounter. During your trip, you will just know the trip will be around 4 hours. The same applies to long-term stock investment. Now, I got this topic covered. I want to move to the most bullish news for Ehang. You guys know that I always care about what the CEO says and what his vision is. Today is the day where there are some leaks from the company. There is a letter circulating which he gives to his interns and internal staff. This is the source. This source is in Chinese. In the letter, he described how to achieve the 4 strategic goals of Ehang to be a successful company. Let me read this part of the letter to you. We believe that in the future, people will use Ehang's air taxi service as easily as using taxis or Uber. Similarly, people will experience the convenience of Ehang's logistics, greatly improving logistic efficiency, and we will become SF and UPS in the air. Most viewers and subscribers know about Ehang's ambition, which we talked about in previous videos. This confirms again that it will not settle with just being a drone manufacturer. If we see institutional investors and loans for Ehang coming in, I'm sure they will acquire companies in that direction. Now have a look at this. The first step he wants to do is create various products for short and long range to cover all the future needs. We know this process is very much done and we hope for a successful presentation in May. Number 2. Let me read this. Gradually realize the transformation from manufacturer to operation service provider. Recruit talents from first-class transportation companies such as Uber, Didi, Waymo, etc. and build a first-class operation team. This just confirms again that Ehang wants to become the new Uber, DHL, UPS, FedEx of the air. I'm happy that he said, soon we will introduce more powerful talent incentive policies, optimize our salary system and stimulate everyone's entrepreneurial passion. He is willing to pay more, and we saw from his earning release that he is also willing to give out shares. This will align by saying, stimulate everyone's entrepreneurial passion. It sounds like he wants to find top talents and pay and share with the company's future success, which is fine. Let me read number 3 in full. 3. Focus on business and gradually divest less related businesses. Carry out the divestiture or outsourcing corporation of businesses that have little relevance to manned logistics services such as air media and smart cities, allowing the entire company to focus on the core strategic direction. This aligns very much with what I said last time and with my way of thinking. I said I'm worried that other branches of the company act as a slow horse. I used the image of a coach and said that the coach could only move as fast as the slowest horse. In this couple of sentences, he said that he would give up those slow horses and outsource them so the company can focus on the main business, which will be meant logistics. Number 4 is accelerating pilot projects, expansions, and getting certificates to be used internationally and in the broader market like tourism, transportation, and logistics, which makes sense. But now, for everyone who watched this video up to here, let me show you the bomb news. 400 passenger logistic aircraft in 2020. Internally, he is setting up a goal of 400 drones. But on the earning report, he was saying 250 drones. The company also had an outlook of only 130 million RMB to 180 million, which are the numbers of 2019 and 2020. The business outlook was presenting no rise in revenue for 2021, but internally they are striving for a 400% increase. He said that he knows that the goal is impossible and is a challenging goal, but me getting a clearer picture of how the CEO thinks, I think next year we will hear that Ehang was able to produce around 300 to 330 passenger drones, which would be in the middle of what he told the investor and his staff. To his staff, he wants 400 drones, and to the investor he said it would be 250 drones. So he can push his staff to get close to that number, even he knows it's not possible, and he will overachieve what he promised the investors. Investors will be happy and the staff is getting close to the milestone. This feels great. If he told the investors they would try to deliver 400 passenger drones this year and miss, it will be a disaster for investors, and the staff would be under so much pressure and feel responsible for their failure, which is not good for the working culture. From this behavior of the CEO, we understand that he does not care about the stock price as much. He is not pumping it up. He is patiently building more fundamentals. I think for us investors, we need to stay flexible in our minds. When a company says one thing, it can mean something different, and it might have more meaning than the number they mentioned. Many investors and traders were taking the business outlook with 120 to 180 million as face value and sold their stock. We have to stay flexible and rethink what is going on. With little basic math, we know the company had a 50 EH216 order and a total backlog of about 100 EH216, which alone will exceed the 180 million RMB from 2020. Let me show you the number of units. You see, there were only 70 units in 2020. This means if all the other numbers remain the same, the 100 units in the backlog plus new orders will generate more than the 180 million RMB projected. I think many investors don't take the time to understand how a financial report is written. We have financial reports which try to exaggerate, but we also find financial reports which are written in a very humble way or in a very defensive way, like Xpeng. The way they write those financial reports can affect the stock as well. And we as long-term investors need to understand the personality of the CEO and the company, how they communicate with us. There are a lot of hints, and when we understand them, we truly know what to do. Let me give you another example here. The CEO has around 40% of all Ehang stocks. He could sell them at the peak of $100 per stock and he would be a billionaire. But he didn't sell. He still keep all his shares, which means he he is not so money motivated, at least not for 1 billion. He has bigger goals than this. This is what I think. This is how you want a CEO to be. So this was a gigantic update to Ehang. I hope that you could learn something here. Anyways, for legal reasons, let me tell you that I'm not a financial advisor. I'm just a guy on YouTube. Please remember, do your own due diligence and hire a financial advisor if necessary. Please like, share and subscribe to my channel when you don't want to miss out any new stock information and investment opportunity. Thank you so much and see you hopefully in the next video. Thank you. Bye.